Welcome to Real Estate Live, where your questions get answered. We get to the point of the day's hot topics everyone is talking about 3 times a week. We go live at 9 a.m. Pacific time on Monday, Wednesday, Friday on YouTube and Facebook. Today's hot topic is all about the new mortgage lending rules, specifically the minimum credit score required, what happens with furloughed employees, down payment assistance, and jumbo loans. I'm your host, Andrew Finney with King Realty Group in beautiful Las Vegas, Nevada. To tell us more about what's going on with the mortgage lending rules, I'll be interviewing Bill Marin with New American Funding, and he'll explain what's going on and give us the updates about mortgage rates and what to expect next. Afterwards, we'll get into the live Q&A session where we'll have a special guest, Gloria Matlin, rockstar real estate agent with Compass Realty out of Chicago, Illinois, join in. I'll be going live every at 9 a.m. Pacific Standard Time, Monday, Wednesday, and Friday. Let's go ahead and get Bill and Gloria on screen and get into today's hot topic. It is so fun live streaming. I'm going to get this down. I'm telling you, I'm going to get this down where we get everybody going just right. Bill, are you with us yet?
There he is. Good morning, Andrew. What's going on, buddy?
Good morning. Thank you for your patience. I'm still working on this. This is so much fun live streaming. But I know that you had shared with us about the new mortgage lending rules. We started talking about it last week, specifically those 4 main topics. Why don't you go ahead and take them in turn? And we're standing by, ready for your wisdom.
Yeah, Andrew. So, those are really, man, that's what everybody's asking about, right? Are we shut down? Can we lend? Do we have any loan programs out there? Yeah, we do. Every lender is different, though, like we talked about last week. Every lender is going to have their own guidelines, and this is something that does change literally on like a daily to weekly basis for sure. So you want to make sure that any of our clients, anybody listening to this that's in contract, thinking about buying, pre-approved, out looking for a home, follow up with that lender, right? They're very, very busy, not meaning to not call you back and keep you updated, but I would follow up with them and touch base with them and make sure those guidelines haven't changed. The four main topics we were talking about last week. The first thing is minimum credit score. A lot of lenders across the board, pretty much every lender out there, has actually increased their minimum FICO requirements. Before this all happened, we could do an FHA loan down to a 580 with 3.5% down, with 10% down, go all the way down to a 500, right? At New American Funding, where I currently work, and great options, but that's no longer there. There is a lot of other programs available, conventional, VA, jumbo, but minimum credit score requirements right now at New American Funding is 620 and above. Which is pretty great, because there's a lot of companies out there who are, they increase their minimum FICO to 680 and above. Some 660, 640 is very, very common. So that is something to really watch out for. So if you're pre-approved, if we got any buyers out there, or, anybody out there looking for homes that's below a 620, even below like a 680, you want to follow up with your lender to make sure that you're still pre-approved, because more likely their guidelines have changed. So 620 is kind of the minimum, which is what we're seeing, which is what we're at, 620 and above minimum FICO. The next thing is something that's, especially here in Las Vegas, man, with all the casinos. I know, Andrew, you and I were talking about this, was furloughed employees, all the casinos, the hospitality industry, across the country, man. So many places are shelter in place, or, just kind of recommending to stay home kind of thing. So non-essential businesses are essentially shut down. They're not there anymore, so people are not working. There's a lot of people that are in escrow, right? Like Andrew, you and I have had deals that have been in escrow. People are, planning on closing on their home, maybe before we even go back to work, right? Most lenders out there are requiring that they either get an extension of escrow, or, they cancel. And unfortunately, sometimes, it is the right decision to cancel, but right now, we are actually allowing individuals that are just doing a standard FHA conventional or VA loan, no down payment assistance with this, but just a regular standard FHA conventional VA. If you're currently furloughed and you have 6 to 12 months of reserves for your principal, interest, taxes, and insurance, your PITI, from the home that you're buying, 6 to 12 months reserves in the bank after you close. So after your down payment and your closing costs, everything's said and done. We're actually allowing you guys to still close on those loans, which is huge. That news came out last week, and that is a very, very big deal. So if anybody out there needs help with that, we might be able to help save a deal or two. I understand that a lot of people may not have those 6 to 12 months, but the idea and the thinking that we have behind that, I believe, it's just my opinion, is that, this is going to pass. This will pass, and people will be going back to work. And because you have 6 to 12 months of mortgage payments in the bank, what's the first thing you're probably going to pay after taking care of your family's food and shelter and all that is paying for your mortgage, so that is huge. That's definitely one of the big things. I know, Andrew, you and I talked about that. What are some of your thoughts on that, man?
About furloughed employees and the situation of how to help them. I think
Yeah.
that whatever we can do to help them is extremely important because, as you mentioned a moment ago, we definitely have had clients here. I know that just between what you and I were working, we had like 2 or
Yeah.
3 families that dropped out of contract due to no fault of their own. Just simply they were employed by MGM International or a different
Yeah.
corporation that furloughed them, and that's all it took. And then with what was happening with the programs at the time, they were unable to close. And I'm just absolutely heartbroken because, I just want to help them and help them get what they want. But I do think that things happen for a reason, Bill. And
Yeah.
I do appreciate the programs now coming out to help them if they're furloughed. That said, I think the more that we can do to help the people in need, the better off we'll all be because we're all stronger and better together than we are not. So
Yeah.
whatever we can do is what it comes down to in my mind's eye. I am concerned about some different things, and I'm tracking different things with like mortgage forbearance and how this plays out. Because at the end of the day, the best time for somebody to buy or sell a home is when it's the right time for them in their life. And I don't want to ever see anybody risking a short sale or foreclosure because they were super excited to buy their new home. They bought their new home, and then only to go in the mortgage forbearance, the payments to be due, 6 months into the future, balloon on them, and they can't pay it or restructure it in such a way. So I am kind of like balanced, if it makes sense. I'm excited about the opportunity to help the furloughed employees. At the same time, I want to make sure we're having real conversations with trusted real estate advisors and loan officers to help people, because if they have the job security, rock on. If it's the right time and the right place in your life to buy a home, why not? You're going to be able to take advantage of the market and lack of competition in the market for people that are being more directly affected by COVID. So those are my thoughts on it. So, Gloria, did you want to weigh in anything of your thoughts about the furloughed employees?
Well, luckily, I'm in an area where we're not experiencing that as heavily as you are in Las Vegas, for sure. It's more of a situation of everybody is just kind of in this downturn of like, should we be doing it right now, or should we just move on and wait it out, or and just being available. I have a closing scheduled for next week with the doctor, who just asked us to move the closing 3 weeks forward because they're just too busy. So they can't even get away to get their things together. So hopefully it'll, I hope in about 3 weeks, we're going to be in a better place for all of us. But luckily, I haven't been too heavily influenced by what's happening with the furloughs yet. But it'll happen, I'm sure.
Right. So, Bill, did you have any more things you want to share with us about the furloughed employees, or would you like to go into the changes in down payment assistance?
No,
I know there's a lot
if
about
anybody
that.
listening to this, man, is in a furloughed position and your lender's not able to close you now, and you do have those 6 to 12 months of reserves in the bank, look in the description below and just reach out to me and see if we can help. Again, it doesn't matter if you're here in Las Vegas or whether you are, out of state. We do have an out of state lending team that can help out literally across the country. So if you are someone that does need help, definitely reach out to us and we'll see what we can do. So I think that's the most important thing, is don't just give up, right? Like just because you see it, just because you're furloughed, if you got that money there might be some options for you.
Perfect. And obviously, here's your landing page right here. Very easy to remember. And again, is in the description, but simply billmarinloans.com. If you have any questions about furloughed status, you have the reserves in the bank, give him a call. He can put you in touch with the loan officer in your local area if he's unable to work with you directly. All the same, Bill, thank you so much for volunteering there and helping everybody out. That really means a lot. And I'm very happy to have you here with us today.
Thanks,
so
man.
Tell us what's happening with the changes to down payment assistance. I know this affects millions and millions of Americans every year that are buying a home. Down payment assistance is one of those most popular options. So
it's a great program, for people that are just getting into the home to maybe for the first time, maybe kind of entering the home market after the last, crash that did happen back 2008, 2010. But the big thing is to look at, again, just communication is key during this whole process, whether you're talking about thinking you've got forbearance going on, or whether you're pre-approved, or whether you're in contract thinking you're going to close your new home next week. The biggest thing is communication. So anybody that's pre-approved for any down payment assistance right now that's currently in contract or out looking for a home, just call your lender, call your loan officer, talk to them, find out what's up, see if that program still even exists. because Andrew, as you and I've seen the last couple of weeks, I mean, there's been programs that literally just halted, stopped doing business altogether. Some of the programs went away completely. We are still doing some local programs here in Las Vegas, which is great. They're still there. Some of them still have some really good interest rates, which is awesome. But again, most of the down payment assistance right now is totally gone. And a lot of lending companies, mortgage bankers, mortgage companies, banks, they just stopped doing them altogether. So again, communication is key when it comes to that. And that kind of leads into the next thing, talking about the jumbo loans. And Andrew, you and I have talked a little bit about this over the last couple of years. But these jumbo loans is any loan amount that's going to be over the max conforming loan limit of $510,400. So if you're looking at the higher price points, a few weeks ago, a month ago, there was a lot of different options for you. I mean, there was so many different, 5%, 10% down jumbo loans, which is great. That market has drastically changed. There's really not much out there. There's not many jumbo options. So again, communication is key. If you are in contract on a jumbo loan, if you've been pre-approved, even if you're fully approved and you're thinking you're going to close in the next couple of days, call your loan officer, call your lender, talk to them, make sure that they still have the program available. We do have some great options. There is things called non-QM loans, Andrew, like you and I've talked about before, to where literally someone's self-employed. The two biggest kind of keys within this is somebody is truly self-employed, owns their own business. You can do a 12 to 24 month bank statement program. This is not a stated income loan by any means. This is not what that is, but this is someone who's self-employed, who can show us 12 to 24 months of bank statements. And we literally comb through there and we look truly what is their real income. We look and see the deposits, what they got going on. So it's not stated, but it is allowing us to use your bank statements as proof of income. So the non-QM is still there. It is no longer 10% down, which is what we used to allow. Now you're looking 20 to 25% down, depending on the individual scenario for that bank statement loan. So that is still there. And those actually can be done even below the jumbo threshold. So kind of keep that in mind. We do also have some things that some other people might want to look out for as well. When you're looking kind of $1 million and under sales price, we have a first and second, to where the first mortgage would follow standard conventional conforming guidelines up to $510,400, and then we can step in and do a second, either a home equity line of credit or a closed-end second, just meaning a standard closed-end second, to help kind of keep you out of that jumbo world, still get your loan closed, and actually have a really, really low payment. It's not an ARM. It should not be an adjustable rate mortgage, right? The conforming first can be fixed. The second will be fixed as well. So there is still some great options out there, but just communication is key. And anybody that's out there buying, Andrew, should really be just in contact with their lender constantly to make sure the program is still available.
Okay, fantastic. And what's going on with mortgage rates today?
Take a quick drink there. So last week was crazy. There was a lot of, I was looking at locking in an interest rate. I locked a couple of rates in at 2.875 for our VA folks, doing a VA interest rate reduction loan. Phenomenal. VA purchase right around the same, a little bit higher. But also on the other end of that spectrum, had an FHA buyer that I locked in last week. They had below a 640 credit score. So their other lender that was actually a broker declined their loan, came over to us. They had a 625 FICO score. We locked them in at 3.875, a little bit of a cost to that rate, but we're able to get the deal done. So the rate was obviously a little bit higher, but there is big swings going on right now with that. The market opened up relatively flat today, so don't really expect much changes, in the short term this week. But there is some big things coming out this week. On Wednesday, obviously, there's a report coming out. Thursday is the unemployment data that's going to hit. So we'll be able to see kind of where we're truly at with that, because last week the numbers were a little bit behind. And we're expecting it to be, even worse than it was before. Obviously, if you do the math, you look at things, which typically does mean good news for interest rates. In this market, a little bit off. It doesn't always right now, but we are thinking that rates might stay relatively consistent and maybe even get a little bit better later in the week.
later in the week. So that's what we're looking at for anybody that it's home shopping right now with this week's trends. And obviously we'll do another update on Wednesday. So let's go ahead and get into the favorite part, I think, of all of us of the show, which is getting into the Q&A section. And again, I'd like to remind everyone, today's special guest is Gloria Matlin out of Chicago, Illinois. Gloria and I've been in conversation for, I guess the last 2 to 3 years. And I've sent some people to work with her in Chicago, and they had the most amazing experience working with you, Gloria. They couldn't say enough things about you. So I'd like to do is go ahead and give you a shout out to anybody that would like to follow you on Facebook. You have a lot of cool stuff, but I did specifically, you are quite the active lady on Pinterest. You have pictures for everything going on in Chicagoland. If anybody wants to know what something looks like in Chicago, let me tell you, head over to Gloria's Pinterest account and you'll be able to check it out pretty quick. And if you'd like to get in touch, again, all of her contact information is in the show more description. She is a trusted real estate advisor with Compass Realty in Chicago, Illinois. So let's go ahead and take a look at the questions that are coming in next. And I'd like to remind everybody, if you'd like to join in live, the link is in the description below on both Facebook and YouTube. Just click it and we'll verify that you're trying to access us and we can get you on screen with us. It'd be super cool. So we have Bijou Arnand. And he says, hi, my question is that I'm very near to closing date. Lender is Wells Fargo. They did not send documents to the title company yet. If I cancel my agreement now, what is the consequence that will happen in California? And then he goes on to say, I think the situation is not good now. Can I get my earnest money deposit back? What are your thoughts?
Depends on what kind of loan, Andrew. I mean, it really truly depends on what kind of loan, and it depends on his situation. If he's currently laid off and he doesn't qualify anymore and he's doing an FHA or VA loan, then yeah, he gets his earnest deposit back as long as he didn't sign anything releasing it, right? But it case by case. I mean, I wouldn't, if you can still qualify to buy and everything is still good, you might want to still proceed with that, but I would just kind of look at your individual situation. And then Andrew, you're the expert when it comes to that earnest deposit and all that, but I do believe if he is still qualified and just chooses to cancel, I don't know what the ramifications would be.
Well, it would go back to what you said, pursuant to a lending guideline. If it's an FHA or VA mandatory clause, I'm not even sure if it's just a situation that was a decision to cancel that late in the game. Once all contingencies have passed in a contract, and if he's not being financially disqualified, then he would definitely lose his earnest money deposit in such a case. There's no, once you pass contingencies, they're gone. The only saving grace, like you said, a FHA, VA type loan is that a mandatory clause. He said he's with conventional. I see that you just popped that on. So Bijou, thank you so much for letting us know. Again, unless you lost your job and there's a reason for financial disqualification at this point, you would be losing your earnest money deposit in 9 of 10 cases, if not 10 of 10 cases, just to be straight with you. So Gloria, what did you want to weigh in on that with any thoughts from your experience in Chicago?
Oh, the same thing here. Unless you really have, if you don't have a job, obviously they're going to, verify your income at the very end. And if there is no job, you're going to certainly not be able to close. So far, we haven't seen too many problems with closings at this moment, but I suspect in the next 2 weeks or so, it's really going to start coming forth a little bit more than we're seeing at this moment. But I just had an FHA VA loan that was unbelievable. Like you said, Bill, we did a 2.85, I think, or 2 point whatever it was. And everybody's happy. And it was a little harrowing because this all came down in the last 2 weeks. And I was really kind of thinking this isn't going to work, but it ended up working and we're pretty much got it clear to close now. So I'm very pleased. Mm-hmm.
That is good to hear. And Drew's Enthused, thank you for catching us back again. He says, howdy, folks. Well, howdy, Drew's Enthused. We always love when you can join in. We see you on almost all of them, so it's always great. Thank you so much. Rafael Flores, it's also great to see you again. Says, good morning, guys, from Fresno, California. Well, good morning to you, my friend. Obviously, Gloria's in Chicago, and Bill and I are in Vegas. Love in April. Says, good morning, everyone. Looking forward to today's topic. Awesome. And just to give you a reminder, if you're just joining us now, Bill was going over the hot topics of the day, leading in specifically with the new mortgage lending rules as it pertains to the minimum credit score, furloughed employees, down payment assistance programs, and jumbo home loans, along with today's mortgage rate trends so that you know what to expect going forward this week. Of course, we'll be back live again on Wednesday to talk about that. Now, I did want to touch bases with you on a couple of different things you said just for points of clarity. So as you were talking, you might see my head down here. I'm over here scribbling notes, right? So when we were talking about FICO is always a very hot topic. When you're talking about some people that may be working with mortgage companies that are now requiring increased FICO, what is that minimum? Did you say it was a 680 and up?
Some mortgage companies, yeah, they're 680 and up. It's not too common. The more common one we're seeing is 660 and 640, which is what a lot of lenders are requiring. But yeah, that's what we're seeing.
So whenever you're talking about the difference between the 640 and 660, is that specific to a certain type of loan that would require either the 640 or the 660? What is the situation there? Because we need to help make sense of the situation. Because if someone's sitting at a 660 and they say, hey, I got good job security, I want to buy, but do I need a 640 or do I need a 660? Which one is it and why?
So it's just depending on the different companies. Different companies require different things. That's just a blanket minimum score requirement that companies are putting out. Like New American Funding, we're only the 620, and that's kind of across the board, for FHA, VA, and conventional. If you're looking at a conventional loan with a 620 credit score with 3% down, that's not going to be too sexy, right? When it comes to interest rate and points and that kind of thing. So is there additional guidelines on top of that? Yes, there is, of course. But this is just kind of a blanket minimum credit score requirement to do any type of business at all, which is what that is. So, and I didn't mention this before, Andrew, but it's kind of a very important thing right now, very important actually for home buyers to not try to play the market if you're in contract and if you're approved. If your lender has you fully underwritten, approved, or maybe just gotten in the process and the rate was good enough at that time, or you're currently locked in and you are approved, don't play the market. Don't wait just because I said Thursday the rates might be a little bit better. Maybe not. If you are qualified based on the rate that you can lock in today, or you're already locked in, just count your blessings, because that's amazing, because these rates are going up and down so much that literally, Thursday morning they could be great. By Thursday afternoon, they could be not great. So again, if you are qualified, get that rate locked and just, like I said, count your blessings.
Okay, fantastic.
I have a question for Bill. If somebody does get furloughed at this point, and they can't, let's say, meet their requirements of paying their rent or mortgage or whatever they're in right now before they're going to move ahead and purchase, how do you think that's going to affect situations with FICO scores? Because we know that it's going to affect it. It typically does. So
it definitely typically does.
I mean,
sorry, I didn't hear. What do you say? Sorry.
Just wondered if there will be a way to help our buyers kind of get around the fact that, let's say, they may miss a payment this month because of whatever, and just not wanting to put out too much money at this point, holding on to their savings. And let's say they have a couple of late pays with their charge companies and all that. Is that going to, in the long run, going to affect them when they get to the closing table in 6 weeks, let's say?
So if they currently are delinquent on a mortgage and they have a 30-day late, maybe they're buying another property, then yes, that would, without a doubt. So that definitely does have an impact. We don't really know exactly how the whole forbearance thing is going to work out yet, regarding the credit bureaus for sure, or regarding individual lenders. I know, Andrew, we talked about this on the last video, but Gloria, it's so important for all of our buyers to not just blanketly listen to the media, whatever channel you're watching. It does not matter. Right, left, conservative, liberal, conservative. None of that matters. Don't just blanket listen to the news. Contact your loan servicer, meaning look at your mortgage statement, call that number, find out what their policies are for the mortgage forbearance. If you're because every situation is different. Don't just assume that you're going to be able to skip mortgage payments. You're going to have to repay that at some point. Again, every lender is different. So the credit score, like you were talking about, as of right now, they are late, and that is going to affect things that could potentially kill the deal if they do have a late that does report by the time we go to close on the loan, without a doubt.
Good stuff. So Pug Love in April, I do see your question. I want to bounce over and I'll come back to you, Pug Love in April, if that's okay. Sean Perry wanted to ask a question, and I know this comes up every single live stream, and I like to keep hitting this right on the topic and keep everybody updated every live stream 3 days a week here. So Sean says, good morning, guys. Will COVID-19 cause the housing market to collapse. So since I've gone into it 6 and probably going to go in 7 times now, on my thoughts on this matter, Gloria, would you share your perspective just so we can change it up and get your insights into your thoughts, please?
Well, luckily, we're still pretty busy here in the Chicagoland area, which is quite shocking to all of us. But there are still people who have to buy and still sellers who have to sell. So we are extremely busy. We had actually three sales this weekend, which is literally a shock, and they were all multiple offers. So it kind of tells us there's still everybody out there ready to go, and they have to do it. It's not the one thing we're very, very cautious of in our area. I don't know if you have the same thing in Las Vegas, but we cannot show homes right now that are tenant occupied. That's been handed down by the Illinois statutes. And then we can show homes, but with 4 people in attendance only. So we're really doing mostly virtual tours right now. Because that really is the safest way to go. And the same thing with our home inspections. It's all the inspector goes and nobody else is going. So we're really trying to follow the rule of thumb here and everybody abiding by it. But we're pretty crazy busy. Whether or not we'll see a pent up desire even when this ends, I think it'll be real crazy busy. But we're not seeing a lot of new listings coming on. So that's a little bit of difference right now. But the great thing is it's cleaning up our listings that have been sitting on the market. So it's really working out pretty well at this point. We hold our breath though.
Yeah, and thank you for that. And that's why it's so important to me, to be able to get agents out of all 50 United States on the camera, at least a new agent from a different state, every single live stream, because it's all about perspective versus perception. Now, to Sean's point, I know that's a very supercharged emotional word about the housing market collapse, and I've said it 2 weeks ago. I'm going to tell you again, and I'm just going to keep consistent on this until it changes. And if and when it changes, I'll be the first one to let you know as quickly as I see it changing. So when you talk about the specific COVID-19 causing the housing market collapse, the answer to that question is no. When you talk about the stock market and what's going on with it and causing the housing market to collapse, the answer is no. I would like to reiterate facts, and facts are very important from a historical context to know where we've been, to know where we're going. When we saw the 2008 collapse, it was due to essentially a lot of perfect storms merging at one single time, from what was going on in the financial sector, the lending sector, into the manufacturing sectors, the technology sectors, and everything, with the rules that were governing the processes of real estate and mortgage lending practice in those times. You could literally have what was called a stated income, stated asset loan, a no income, no asset loan. Afterwards, you saw the passage of Dodd-Frank and CFPB formation about tightening up the lending guidelines and requirements moving forward. As such, as a byproduct of that, since about 2011, 2012, and please correct me if I'm mistaken here, Bill, but about that time frame, we started seeing people actually have to meet the muster to get a loan pre-approval letter, which means that we saw income, assets, credit, and employment verifications done. We saw tightening criteria on how low your credit score could go. I remember when I was still active duty, going into the 2008 collapse, having lenders call me. How they got my number, I don't know, asking me, if I wanted to buy a house with my Marine Corps income. I was like, no, dude. These homes in San Diego too expensive for me. Well, we can approve you with as low as like a 400 credit score. I said, that ain't the problem, man. I got a good credit score. It's above 700. I said, I just ain't got that kind of money to buy $1 million home. Oh no, you can do an adjustable rate. And it was all this trickery and deceit. But at the end of the day, this country boy ain't no one's fool. I like, no, I ain't got that kind of money. I said, what's the mortgage when it comes due? And they're like, $5,000 a month. That's all. I was like, that's more than I earn. So that's not going to work for me, right? So the point that I'd like to make, Sean, is when we're talking about the housing collapse, the biggest threat to the housing market is one thing and one thing only, right? And that is job security, and that is employment. And that's not just a threat to the housing market, it's a threat to the overall economy at large. So when we're talking about that, it's also important to note that the United States economy is not comprised of just a hospitality industry, a food industry, these are not the only businesses and major sectors we have in this country. We are comprised of a strong 20 core different industries and sectors that stimulate our economy. So when you say, hey, what comes first, the chicken or the egg, that's kind of what we're looking at here. And I could see why popular notion may be, hey, you know what, one thing after another snowballs and it precipitates. Perhaps yes and perhaps no. But if when a lot of us are able to maintain job security, and if we come together in these times of need to support each other and take care of each other and ideally learn from this experience and stay together long after this experience, we can help each other out during these times and always. So, Sean, I am watching the market. I am watching what's going on. And to Gloria's point, when she was sharing what's going on in Chicago, at the end of the day, because of what we just mentioned about how many different sectors and industries really comprise the American economy on just the massive levels ones, we are still seeing in real estate practice, people put their homes up for sale and those homes sell. So I would like to I would really like to be able to overcome this thought process that's out there by keep sharing the facts about the situation. You hear some people say, hey, you know, the U.S. economy is going to really suck here in about 6 to 12 months. We're going to see an increase in foreclosures, an increase in short sales, an increase in this, and that's going to hurt the market. It's going to devastate the market. Look, why put the bad mojo out there is the way I look at it, number one. And number two, let's talk about it. Because if we have a conversation about it, now we're talking about it. If we're talking about it and we think that we're going to be a soothsayer that can read the future, a psychic, right? Then we can't have time now to pivot and to adjust. The reality of mortgage forbearance and the reality of short sales and everything else, there's a lot of things going on right now in the market that's going on with the Congress and the Senate and the laws that are being passed to try to protect people. Now, that said, going into short sales and putting that out there, I don't think that's going to be the case. I just don't see that happening right now, nor do I really see the massive increase of foreclosures, because will people miss out on the mortgage payments? Perhaps. And if they do, that's why they have mortgage forbearance. How is mortgage forbearance going to play out? Is it going to balloon on you overnight? I don't know the answer to that question just yet as this keeps shaping up. My thought is, why not call your congressperson, your senator, and let them know, hey, this is my situation, and hey, I'm down for this mortgage forbearance if I need it. But at the end of the day, I need you guys to get with the lending companies and start saying, hey, we need to restructure this, not a balloon payment right out of the gate whenever we just first return to work, because nobody's going to be able to afford that. Not to spread load it over the next 12 months, but maybe spread load the payment that get caught back up over 3 years. Or maybe provide you the option to tack it onto the backside of your existing loan balance, which obviously there's a trade-off to that. Given an amortization schedule, you're going to go up higher and actually owe more. But let's provide you with the options to help, because that's what we need to do together. And by picking up that phone, by writing that congressperson, by writing that senator, this is how we get the conversation going. This is how we come together. This is why we're stronger together than we are not. And let's use our voice as the people, for the people, just as we've been designed to do in this democracy, so we can help each other move forward and keep that from happening. So whenever I hear fear mongers out there, I absolutely hate it. I hate it. I hate it. I hate it with a passion. I'm not a fear monger. I believe in spreading love, joy, and hope. And on every interaction that I have, direct or indirect, the best of my ability, what you will never get from me is fear mongering. What you'll never get from me is a lie or a deceit. What you will get from me is the truth, and the truth at all times as it exists right here, right now, today, with reasonable forecast. That's why we're going live 3 days a week. That's why we're asking other agents around the country to come on. That's why I'm asking my loan officer here locally to come on with me. And if there's another loan officer that wants to join, pipe up and let's get on camera and let's make it happen. So obviously I get a little passionate, guys. So let's move along. Sean, thank you so much for the great question, by the way. So Pug Love in April, she's asking a question that comes up quite a bit. It has to do with FICO scores. Pug Love in April says, what FICO score do lenders use? Is it FICO 8, 9, or a totally different one? So she's essentially asking about the tri-merge report, Bill, and exactly what you guys do with it and how that works.
So every lender is different. The different bureaus that they pull from are Experian, TransUnion, and Equifax. We all have different credit vendors. but just depending on who they use will differ that answer. But we do look at all 3 credit bureaus, and we take the middle score from the 3 credit bureaus: TransUnion, Equifax, and Experian.
So you take the middle credit score, and that's pretty common across the United States, right?
Yep.
Yeah.
Yep.
So I want to hit on another one. And Pug Love in April, thank you for that question. But this is on the same topic here. And the reason is because they say, okay, great. If I'm a single person, that works out great. But what if I'm married? What if I have a joint applicant on my loan? What credit score do you go off of as a loan officer then if, let's say, one person has a 700 mid score and the other one has a 600 mid score? What happens then? And they need both to qualify for the loan.
Yeah, so that's the kicker there. If you need both people to qualify for the loan, we would go off of the lower of the 2 credit scores in that situation. So that is that situation to where sometimes if you don't need the other person and you're just using maybe their assets, you can take them off. But if you do need both incomes to qualify, then absolutely we'd be going off of the lower of the 2 credit scores. Yeah.
Okay, so that's good to know. So essentially, to boil it down, is you just go off the lowest of the 2 if you're a joint applicant, and if you need both people to qualify, that can present a little bit of a conundrum then, right?
Yep, for sure.
So Pug Love in April says, thank you so much for the great question. I saw that you also helped out Brown Gal 00. So thank you for that. That was awesome. And Brown Gal, thank you so much. In the middle here is Gloria Matlin. From Chicago, Illinois. Her contact information is in the description below on both Facebook and YouTube. Rafael Flores, thank you. He asking a question. Rafael says, seller of a home I was in line to purchase lost his job one day before I closed escrow. I was able to close even after he wanted to cancel our contract, waiting for keys to be delivered on 4/13 per the agreement. Wow. Rafael, thank you for that insight. That's heartbreaking and heartwarming all at the same time. That's a hard one. So that's pretty interesting because I know that from past experience, Bill, we had a client some years ago that was in contract to buy a house, and then the seller ended up being diagnosed maybe a week or so before closing with cancer. And terminal cancer at that, and had requested the cancel, obviously, and return the buyer's money and return the amount of money for the home appraisal and the home inspection and stuff back to the buyer. But in that case, I thought it was definitely the most meaningful thing to do. But now with COVID-19 and people losing their jobs and stuff, I'm absolutely heartbroken. Excited for you, Rafael, being able to buy and close on your new home. That's amazing. Just a little bit heartbroken for the seller in this situation if they lost their job one day before and the closing was permitted to go through. And now that seller, I don't know what's going on with them, but I definitely want to send them positive mojo. And again, this is why I like to reiterate the fact again and again and again. We need to be there to help people in need. We need to be there and step up as people, as communities, and as a nation together to support each other, to help each other. So, Rafael, thank you so much. But that one really is getting to me. So, Bill or Gloria, why don't you step in?
Yeah, Andrew, on that, man. I mean, that's a tough thing, and it's one of those things. Unfortunately, you're going to it sounds like your loan might have already funded, and you might have already closed on your mortgage. So you got to kind of take the emotion out of this one, right? Do you feel bad? Absolutely. Do you want to, maybe help somebody out? Yes. But now, if you close on your mortgage and you funded your loan, and the home is recorded in your name, that is where it comes into play, where now the property is yours and now you are liable for that home. You're liable for that mortgage payment. It does suck. I mean, that's horrible for that person's situation. That just is really unfortunate. But now, again, you got to kind of take the emotion out of that situation and look at it from the point, okay, well, now you're protecting yourself and your family, because now you're liable for that mortgage payment. Now you're liable for the home, and now you're waiting to get your keys. That's just like Andrew, like you said, man, that's kind of heartbreaking, but it kind of is what it is at that point. If it would have happened a couple of weeks before closing, it could have maybe addressed it a little bit differently. But right now, it sounds like that person needs to give you those keys.
Yeah, it's exactly what the case is. If they've already closed, that's the legal thing to do, and that's exactly what you have to do. And that's why I come up with those hashtag JTabs. People wonder how I come up with some of this stuff, like hashtag JTab, right? Just take a breath to reassess, so that the oxygen goes to your brain and everything. The way I come up with those these are like certain daily affirmations I have in my own life, in my own profession, so that when I see something like that, before I would respond or pick up a phone and make a call, I take the breath in and I work through the situation, because I really care a lot about everyone in our community on YouTube and Facebook. I care a lot, obviously, about the families I have the opportunity to work with here in Vegas. And I take it very personal, probably much more so than I need to or should. It's probably a little bit beyond healthy. But at the end of the day, it's why I made this channel, was to help people. And yeah, it really comes from a place of love, joy, and hope. And that's really what's meaningful. So when I see certain things, I'm sorry, I'll react, because we are live and there are no takebacks when you're live, unfortunately. So there's no, hey, let me go and edit this real quick. No, they don't get that option. But Raphael, I am happy for you and your family moving forward. So Pug Love in April says, thank you so much. Pug Love in April, you're welcome. By the way, I do want to give you an update. Hopefully by this Wednesday, I'll have the Hernandez family's promo trailer ready to go for Wednesday at 5:30 Pacific for their reality show. I know you've been waiting and holding in there with us through the seller reality show for the buying series, and I hope it's everything that you were expecting it to be. It's a 14-part series. We hit the 14 major milestones of the home buying process. I figured that when we did that, might as well break it out to an episode per milestone, and just made it a very long series. That's all it did. In reality, most of us complete this process in as little as 30 days around the country. And if it's an attorney state, sometimes maybe up to 45 to 60 days. But all the same, I wanted to break it out from a point of education, a point of fun, to hit those major milestones, because I know those questions come up a lot in the buying process. All the same, stay tuned, Pug Love in April, and I am super excited for you to see it. I see that you say, yay, can't wait to see it. We've been working hard on this one, my friend, and I'm super excited for you to check it out and tell me what you think. So that's awesome. Brown Gal says, thank you, Andrew. I appreciate your channel. Thank you, Brown Gal, and we appreciate you as well being here. So the next thing I wanted to dive into a little bit, Bill, was the down payment assistance. This is something that comes up a lot, and I know you were talking about in the hot topics, and I appreciate all your insights. But when we're talking about down payment assistance in specific, you're like, some are going to be there, some are not going to be there. There's this, there's that. Let's provide a little bit more clarity to what that means between like Home at Last, Home is Possible, or what other programs you're talking about specifically, and how it translates to mortgage lending practices, if that's okay.
Yeah. So depending on down payment assistance typically is hyper local. So your local market will have their own specific down payment assistance programs. Here in Nevada, we had a lot of different ones. As of right now, the most popular and really one of the last ones that is currently active is the Home is Possible program. There is other programs as well that are still there, but just Home is Possible under Nevada Housing Division. There's a lot of different programs that are within that, under that umbrella, if you will, to where it does cover FHA, conventional, and VA buyers. There is, Andrews, I know you and I've talked extensively about, there is underneath that umbrella, there is the VA Hope, the VA, I'm sorry,
Home for Heroes?
VA Heroes loan. And then there is also the FHA teacher's loan, which is great. And then there is some other programs in there as well. And depending on the type of program that they're applying for, the interest rate typically for those couple programs you just mentioned, you're talking about VA and the teacher loan, those rates are phenomenal. And on that program, on the VA program, it's just giving them a really, really low rate, which is great. But depending on where the VA rates are at that day, it might make sense to go with that program, or it might make sense to go with the regular VA. It just depends. There is other first-time buyer programs associated with the Home is Possible under that umbrella, which are great as well. So just depending on somebody's individual scenario, what I like to do is once somebody does an application, I look at it, I look at the ones they qualify for. I just like to give them all the options in black and white so they can choose, they can choose which one makes sense for their family.
And the reason I wanted to dial back on this is something that we were talking about in Wednesday's live stream. And I know you had to cut loose early because you were having a call with the corporate office and getting all the updates about what's going on in the lending world. So you could come back today and give us even more insight. You did send me a private message, Bill. And the reason I thought this was so important to bring up is you have people out there saying that down payment assistance is gone, that it's dead, and all of this stuff is happening. You were really quick after maybe 10 minutes, if that, on that call. Andrew, down payment assistance is not gone. It's not dead. We're still doing it.
I remember putting that comment on there. So I had you in the background as I was on my sales call, and I saw somebody put on there the down payment assistance is gone. It's not gone. It is, a lot of it is temporarily gone, but it's not gone. There's still a lot of help out there for people that do qualify. Again, if you qualify today, if you're in contract today, lock your loan so that way you can reserve those funds. But down payment assistance is not gone by any way, shape, or form. An individual program you might be doing might be gone, but there is a lot that's still out there. So it's important to understand there is options for that.
And I think that a good way of understanding how this works when you start talking about home as possible type programs, down payment assistance, is to understand you have 4 broad categories of home loans as far as what type of loan it is, from the VA that is available to active duty and veterans that could use their VA home loan as a benefit to their service. FHA home loan, which is a federally insured loan that operates in some ways like a VA home loan, but not quite as nice as a VA home loan, but still a very, very good loan product. Then you have conventional, which is what most people think of and associate with, oh, I got to have a 20% down, which actually isn't the case in reality. But at the end of the day, that thought is there. And then you have the USDA home loan, which is for rural United States. Underneath those 4 flags, if you will, then you start separating into all these different banners. And that's where you come up with all these different specific programs, from down payment assistance to home as possible to Bill mentioned a moment ago underneath the VA wing. One example of a sub program is the VA Home for Heroes loan. And another example of what he was referring to underneath the FHA wing was the Teacher's Home as Possible loan. So those are specific loan products that are available underneath that specific type of loan. It's important to understand when Bill says down payment assistance is not dead across these 50 United States, it's not. It doesn't mean that there's not a specific program that you may have been asking about initially, and they say, hey, that program's not available right now. But that's where you need to have a real conversation with your loan officer and simply say, hey, you know what? If that one's not available, what other programs can I qualify for? And what would you suggest if you were me getting ready to buy a home in this time and with this program? Ask your loan officer those questions. Gloria?
Absolutely. I think one of the things that we have to remind our buyers right now is your lender is your friend. You need to talk to your lender consistently. And I know a lot of them are very busy right now trying to close the loans already on the table, but absolutely make sure you're touching base. I had one situation where they were pre-approved, and unfortunately, with things happening so rapidly, they have to go through a different loan program now because of some changes. But it was so important that they reached out to their lender and stayed on top of it. And I just encourage all of my buyers at this moment to absolutely stay on it, because it is very fluid right now.
Yeah, and that's a great point, Gloria and Andrew. I've seen so many different things out there, man, on YouTube, maybe other people on YouTube, different things people are putting out there. It's honestly clickbait, dude. It's just getting somebody to click on something to say, hey, down payment assistance is dead. Click, it's not, man. It's that's misleading. It's unfortunate, and that's just not correct at all. So
thank you.
I can't stand that.
Thank you, Bill. Thank you, and thank you again, because when I see that, I'm just like, come on, people. We love reign supreme, not fear. Quit falling into that fear and quit clicking and giving people that credibility, or makes it look like they're credible when they're in reality not. They're trying to get your emotions so that then they can say, hey, everything will be okay if you pay $99 a month for my training program, or pay me $5,000 and I'll teach you how to take advantage of the foreclosures that are going to be waving across the United States market in 12 months from now. Buy, 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 sell, 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 sell. And you don't smell that breath. It's awful. So it's bullcrap, it's deceit, and it's lies, and I don't appreciate it, and I don't respect it. And look, I may not be the sexiest critter out there. I may not have the best thumbnails out there, but one thing you can always get from my channel is the truth. And it's from a position of love, joy, and hope. And I can't reiterate that enough, because those are my 3 core things that I pray about and that I aspire to every single day, is to help people from a position of love, joy, and hope. So when I see people getting taken advantage of and I see people falling for it, boy, oh boy, does it make me angry with a righteous indignation. And I just want to start smacking something because that's the Marine Corps in me, and I got to dial that back, right? But that said, I don't understand why we don't say, hey, you know what? Let's recognize that for what it is. It's clickbait. If it doesn't make sense, it doesn't make sense. Let's find out the truth. Let's make a well-informed decision that's right for us by just taking a breath and moving forward. Speaking of taking a breath and moving forward, before I start feeling like I'm, dissertating over here, let's move to Kyle Walker. Kyle Walker is asking a brilliant question. Thank you, Kyle, by the way. Kyle says, hi, Andrew. Can you all talk about your experience dealing with income-driven repayment plans and getting a mortgage, particularly through Fannie Mae? Also, how may this be affecting during this time? Oh, I see. How may this be affecting student loans at this time? Student loans. Bill, this is all you, but.
That's a good question.
Yeah.
Guidance hasn't really come out for that yet. Regarding the student loan forbearance and student loan income-based repayment plan, we haven't really seen any change to that, Andrew. As far as right now, I know there's a lot of people who are not paying their student loans because they are in forbearance. We do have to count typically those loans, depending on what type of loan you're doing, against your debt-to-income ratio. So even though you're not paying, great, good for you, your credit's not being harmed. But depending on the loan type, we do have to count those debts against your future ability to repay. Because the fact of the matter is, if you've got, $100,000 in student loans, it doesn't matter whether you're making $100,000 a year or more, or whether you're making $20,000 a year or more. At some point, more than likely, you're going to have to pay those student loans back. So we do have to count that towards your future ability to repay. So I hope that makes sense. Again, there is a lot of changes and things going on right now with Fannie Mae, Freddie Mac, FHA, VA. All of that for the future and how we're going to look at credit reports regarding student loans specifically, and just kind of stay tuned to this channel to find out what we find out when that guidance comes down.
That's a great point. So take note of that, and we're going to circle back to that, Kyle, as we get that guidance out. And that may just be at the hot topic of the day as soon as we find out what the student loan guidelines are going to look like moving forward for getting a mortgage. So that's a really good question, Kyle, and thank you for bringing it up. So just to remind everybody, we are going live 3 days a week, Monday, Wednesday, Friday at 9 a.m. Pacific. We're going to bring this to a close down here. And at the end of the day, Gloria, would you like to share any thoughts with us about how to stay positive? And
I think the most important, just, take a breath. Like you said, it's important to just be there for your neighbors, for your friends, your family. And even though you may not be able to do it in person, just stay positive, really just be able to reach out to anybody. And this is the best time to be reaching out to people because we don't have a lot to do. But reach out to everybody and just offer your services and just be a good person. I mean, we are, like you say, Andrew, in this together, and we need to stay together and focused on getting through this as soon as we can. Thanks for having me today.
Absolutely. And you're welcome back anytime, my friend. And thank you for joining us. Jessica Marcado says, hi, Andrew. Thank you for the live channel. Thank you for tuning in, Jessica. To everybody, I'm wishing you guys a great day. We'll see you back on Wednesday at 9 a.m. Pacific time with the day's hot topic. If your question didn't get answered, then please leave it in the comment section below. Bill and I will be doing our best to answer those questions right away. And of course, you're welcome to join us on Wednesday. To everyone, enjoy a beautiful day and be the reason someone smiles today. Thank you so much.
Thanks, Andrew.
Thank you.